Hello, hello. Have you seen gold is breaking out of this resistance at 2480? What's going on? Let's talk about the details. Welcome to myfinanceteacher.org. Taking a longer term view, as you know, if you've been following this channel for a while, gold likes to follow these intermediate cycles that usually last for around half a year or so. Within those intermediate cycles, we see daily cycles that last for about a month and a half, a couple of months. Zooming in on the most recent intermediate cycle, as I have been talking over the last several weeks, there was a question over here in late June. I had previously mentioned that it might have been an intermediate cycle low, an unusually short one only lasting for 133 days. In my previous videos, I gave this possibility, I gave this scenario a pretty low chance. As time moves on, especially now with the breakout above this ascending triangle, the likelihood of an intermediate cycle low back in late June actually increases, meaning that it's more likely we are since then in a new intermediate cycle rally. We've possibly seen another daily cycle low in August, and we are now in a second daily cycle of an intermediate cycle rally. I would probably still give this scenario less than 50% chance, perhaps 45 to 50% chance. And perhaps in my stubbornness, I might still expect a decline down into a more recognizable intermediate cycle low with perhaps slightly over 50% probability, 50 to 55% chance. But as I mentioned to the members at myfinanceteacher.org last week, we were ready for either eventuality. The strategy I suggested back in that post on the 13th of August is to enter with a possible breakout above this resistance, above this ascending triangle. We even see a successful retest today. Entering here with a tight stop loss, perhaps somewhere around 2460 on gold price, is likely to work out well in either eventuality. If we are indeed continuing to push higher in a new intermediate cycle, this strategy gives you a position to hold on to within this rally. And if that 55% chance scenario actually plays out, following this strategy would allow you to get out of the way before too much damage. Again, we've discussed this with the members last week, and back on Friday with that breakout, our model portfolio did take a bit of a position in gold, again with a relatively tight stop loss. So for more frequent updates, you do want to join us, catch the discussion of these sort of strategies before it's too late. And perhaps another discussion you might want to catch relatively soon is what are the targets for this possible intermediate cycle rally. As I mentioned though, I'm still not 100% convinced. I'm sort of bordering nearly at a 50-50 split, with a possibility of one more breakdown into the more recognizable intermediate cycle low. After all, optimism index on gold, the gold optics, back at that recent June low, has only dropped to mid-60s. Usually, even in good times, as let's say all through 2020 and 2021, intermediate cycle lows in gold are accompanied by these optics dropping somewhere closer to the level of 50. And in bad times, in hard times, as in let's say 2018 and first half of 2019, and as in 2022, during those hard times, intermediate cycle lows are accompanied by these optics dropping much closer to the level of 30. So most recently, perhaps this is one of rare chances when an intermediate cycle low that is more like a sideways correction rather than a scary drop down is accompanied by optics only dropping to mid-60s. That is quite rare historically. With that in mind, you want to develop a strategy that might work out in either way. Let me know what you think of this suggested strategy. Share your ideas down in the comments below. Have a marvelous Monday. Bye bye.